Hey, Happy New Year. I hope your 2025 is off to a roaring start. Let's jump on in and take a look at the market update. What's happening in the real estate market, the economy, how inflation is affecting interest rates and home sales. Let's take a look. So here you have the market update, and I want to share with you where we were in December 24, and then go back 3 years. So if you take a look at the number of home sales, 1,146. We're roughly about 1,000 home sales per month, 1,146 for last month. If we go back 3 years ago, the number of home sales was 1942. So we're selling about half the number of houses in Northeast Florida, the 6-county area, selling about half of the number of houses. Why is that? Well, let's jump in. Well, interest rates are staying stubbornly high. They're anywhere between in the mid sixes to around 7%. So if you take a look at where we're at today to where we were 3 years ago, we were under 3% 3 years ago, and we're roughly around 6.5% to 7%, depending on the loan type. So why is that? Well, inflation was stubbornly high. So in the middle of, if you go back to 2021, inflation had just started to creep up into the 2s and 3s, and then it jumped up to around 9%. It's come back down to, this is the 5-year chart. So let's take a look at the 3-year chart. It looks like it's a little flat here, but when you drill in, we got down to as low as 2.4% in September, and now it's jumping back up. So, the Fed had predicted rate declines, the Fed rate somewhere in the neighborhood of 4 to 6 times this year in 2025, but now they're pulling back on that, saying it may be just a couple of times. So they're trying to keep the rates where high enough to slow the economy without making pushing us into a recession. So it's a real balancing act. And so if you take a look at what's going on, the economy is slowing down, but there's still the credit card spending is at an all-time high, and so that's keeping the numbers inflated higher than what they would like. But if you take a look at inflation, this rate right here is showing the CPI, the Consumer Price Index, which is one of the best indicators of inflation. So it's ticked up from 2.4, 2.6, 2.7, and now 3.3. So interest rates crept up from January 23 to try to cool down the inflation, and it's worked. However, it's creeping back up. And so as the Fed cut rates in the last quarter, they've come down, but the Consumer Price Index, and inflation has crept back up. So they're probably going to cool the rate cuts for this year. And the Fed cuts are not directly tied to mortgage rates. So when folks are going to buy a house, the mortgage rates are based upon bonds, and the Fed rates are for like consumer loans, car loans, business loans, and that type of thing. So as the Fed's cut rates, mortgage and inflation started creeping back up, then that's where the mortgage rates crept back up because of inflation. So let's take a further look at where we're at in the local real estate market. So there were 1,146 home sales in the month of December, and there's roughly 4,500 active listings on the market. So that means that there's roughly 1 out of 4 in Duval County, Jacksonville. It's 1 out of 4 houses are actually selling. If you take a look at St. Johns County is about 741 home sales versus 4,300 listings, and that's about 17%. So it's about 1 out of every 5 houses is selling, whereas Duval's about 1 out of every 4. And then if you go over to Clay County, they're running about 1 out of 5 as well. So, so taking a look at where the pricing is, you can see the trend is down. Okay, for the blue is the average list, the median list price. The red is the new list price, and then the yellow is the sold. So you're seeing a downward trend. The home sales prices did tick up in this last month. However, the overall trend is down, and 1 month doesn't make a trend. By taking a look at the other, well, let's continue on here. So the overall trend is down for pricing, and if you go back to the middle part of the year and call it in July, 311,000 is where the median list price was 308, and it's down to around 300. So you're seeing pressure on about a 5 to 10% pressure on pricing on where the homes are actually selling, and then you can see the same trend is somewhat down for St. Johns County as well as Clay County. Clay County is a little bit erratic, and it's really hard. It's unpredictable what's going on there. There's a lot of new construction there, which is keeping the prices up. But in general, there's overall pressure on pricing. List prices down and sale prices are somewhat down. You can see the absorption rate. If we didn't, the absorption rate just means that if we didn't sell any more houses or didn't put any more houses on the market, it would take 4 months to clean out all of the inventory, get everything sold out. Sold to list price ratio, it was as high as 95% in the middle part of the year, and it's down to 93%. What that means is if you list a house for $100,000, it's likely to sell and close for about $93,700. So days on market continues to rise. It's taking longer to sell homes. There's less buyers in the market because interest rates, every 1 point interest rates go up or down, it affects the purchasing power by 10% up or down for a buyer. So if rates can go from 7 to 6, then a buyer, if they can afford $400,000 at a 7% rate, they can afford a $440,000 house at a 6% rate. So we're hoping that we can get interest rates to start coming down, mortgage rates to start coming down, which will give us better activity in our home sales. So the median sales price in Duval County was $387. And if you look at like St. Johns County, the median sales price there is $527. So there's about $100,000 difference between Duval and St. Johns County. That's no surprise. But so the higher the price in St. Johns County, that's why only 17% of the houses are selling there, because there's less affordability there. And so if you take a look at overall in this year, this is the number of houses that were sold. In 2024, the sold listings, there was 1,175. Last year was 972. The pending sales, it was 667 versus 961. So the pendings are a leading indicator of what's going to get sold. And then the active listings this year, it was 4,500 new houses on the market. Last year in 2023, there was 3,500. So you're seeing that's up about 29%. So overall, things are steady in the Jacksonville real estate market. We are selling about half of the houses we were 3 years ago, but with interest rates being at 3%, it was like free money. So it just overheated the market, the real estate market, and it's more normalized. If we can get some rate reductions, then it's going to increase the purchasing power for buyers. I hope you've enjoyed this month in real estate. If we can ever serve you for your real estate needs, please feel to reach out to me, 904-440-1758. Thanks so much, and we'll see you next time.